Welcome with a new episode of the Market Reporters.
Welcome.
Every week for years we talk about the stock market, also the bond markets, and we always like to talk about sectors. Today we're also going to talk about the subsector, but the markets are a little bit boring, not a lot of volatility. They had gone up for a long time, and now this week they went down a little bit. But one thing happened Wednesday after market, and that was the news. And with the opening of the US stock market, the result came out, and it was a really big company, or is really a big company, and it plunged until now. It's now Thursday, it's around 6 o'clock. The share price plumped with 20%, and that was the biggest plump since 2008. They only had one time they had a bigger plump. That was just a couple of days after the IPO in 2004. They lost 27%. But what I said, it's 6 o'clock. U.S. market is still open, so maybe if it will go down more, they can have the biggest decrease ever. No. Of course we don't hope that. What's going on? Salesforce, probably you know the company. After Wednesday, after the closing bell, they came with an update about the figures, and they were not good. And it was the slowest growth in decades. They still announced a growth, 8% growth, but the market didn't like it. And the question is this one of the first signs that something is going on? Because Salesforce is an IT company. They started with sales products, cloud products, and later they moved more on to also CRM solutions for not only sales but also for client databases and also for marketing. A big company, so it's not a small company that you don't know how important it is. It's an important company for the market, and the question is this a sign for the future IT companies? And the two things, I think, is it a sign about that bad figures can come out, and if they come out, how will markets respond on it? Because that's, I think, the figures are the figures. You know, if you look at them, are they bad? No, profit, growth, but 20% drop of such a big share is something. So
and not only for the sector, no? I mean, the whole stock markets now are very related to the technology market. So
exactly.
Even if you are not in that sector, it will affect also the indices, like the Nasdaq.
Exactly. So I'm going to talk about a little bit what's going on. I have some really important and funny things about Salesforce, and then you make the comparison with one or maybe the biggest competitor
in the market.
Yes. So the figures were not good. They missed a little bit the revenues, but they also missed a little bit the profits. On the other hand, the outlook for the year, they kept the same, and hopefully they did it because they still believe in it, and it does not to keep everybody happy, and probably they can do it because they know what's in the pipeline. So new clients are coming in, but also about the revenues from their sales, the favorable pricings. So hopefully, and if that is true, then a 20% cut of a share is quite a lot, only based on one quarter. So their subscription revenues outlook regarding to that one, they said, okay, it will be lower than we thought before. So that's the underlying. And the question is now, and I think that's a question that's hanging above the whole sector, how will those companies implement AI and can make money out of it? How can they monetize it? That's the question. The management responded also by saying we will generate a lot of revenues in the future from AI. They also said we're going to increase the dividend and we're going to buy back the shares. So why did they do it? Why did they say it? Is it because they think we have to do it because otherwise the share price would have plumped? But can you mention, if they didn't say it, what would happen with the share price? Or they believe so much in in their own strength that they can say that, and that's what they really believe. And then maybe a 20% drop is a lot. Okay, before we go to you about the comparison, Mark Benioff, I hope I pronounce it well, he started a company. He worked with Oracle, and he was the youngest vice president when he was only 25 years old. And the year later, he needed a sabbatical. So it had a price to be the youngest vice president, I think. He went on a sabbatical for 6 months. He came back and he spoke with the CEO Larry Ellison and said, "I want to start my own company and I want to make a cloud CRM." Larry believed in him. He gave him $2 million. He also took a seat in the board. And then Mark found out that he did not only do it to help him, but within Oracle they were copying his model. So he fired him. They have a little bit, a difficult relationship now. But he said always, Mark says in a lot of interviews, I'm the only one who fired Larry. He also had 3 or 4 years before the App Store came out already a sort kind of app, and it was called the App Exchange. And he went to Apple and he said, "You did so much for us. I give you that logo and I give you that for free to use that." So he was a visionary. He is a visionary. They also have the 1-1-1 model, and that means that 1% of the equity, 1% of the product, and 1% of the time of all the employees they give back to society. So some things in time, and sometimes in some things in money. I think it's a nice model. It's typical American, I think. Mm-hmm. He also has some. He did some. You can Google it. Some extreme things on the marketing level, because he sometimes hired protesters and cameras to be in front of competitors and to let them demonstrate, and so he got more attention. He also in the past he hired planes. He sponsored the planes with the competitor, and that were polluting planes. So he's not. He's quite a character, Mark. If you know him, he has a little bit long hair and a little bit of beard. He is a character. In San Francisco, they have the largest building in San Francisco, the Salesforce Towers. They have 80,000 employees and they have 150,000 businesses that they support. And one thing I didn't know, and maybe I should have known, and you probably have known, and you also know, Taco, is that he took over the Times in 2018.
I didn't know
the
that.
Times. That's Salesforce, and you're going to compare it with
Adobe. And I think we make this time a comparison a little bit different than normally. Of course, also about the financials, but we found also some other ways to compare those companies. And maybe it's also related to what you just said. For example, how are they mentioned in the market by the media? It's not the most important because the media has another goal than a financial analyst, but maybe it can be important, like you said, if you have a lot of ways to promote your products and you do actions, well, the positive news can maybe make that the image is better. And yes, Salesforce was last week 27 times positive in the news against 10 times for Adobe, but it was last week before the figures of today. So I'm not sure what everything you read now today is mostly negative. It's also true that they are more in the news than Adobe, and I think you explained
because of Mark.
Because of Mark, so also the negative news was 70 times against 2 for Adobe. So they are just more in the news, both positive as negative. More related to the pricing of the share, which company is more profitable? Well, the net margin of Adobe is 24.08% against 11.87% for Salesforce. So there's a big difference. And also on the return of equity, 39.12 for Adobe against 10.42. And return on the assets, 21% against 6.45. So there's a clear winner,
All those factors,
in favor of Adobe. Also funny, maybe different. What are the shareholders? Are they all institutional investors or also insiders and insiders? I highlighted the level of insiders. That's for Adobe just 0.2%. So I don't think that's very low. I think it's average. I'm not sure. But Salesforce has 3.2% of insiders. So that could say that the people are, well, more involved. I won't say they are more...
they work harder.
Work harder, but at least they have a financial stake in the company. And the last thing, the analysts, so that might be more important than what the media says. I think both companies are very wanted by the analysts. The Adobe has 19 buy ratings against 23 for Salesforce. But I think that's not very surprising. We spoke a lot about
before today.
Yeah, exactly. That's true. But I mean, I think everyone was at least very positive about this sector. But like you said as well, it's very interesting what's going to happen now. If there's now a minor, well, you know, a negative news and not a minor, but I mean, they're still making profit. It's still growth, but the market is very, very. Strong on a strong exaggerating movement, you could say, but it's happening. So that's very interesting to see what's happening with other companies in this sector and other companies in general.
Yeah, I think that's the conclusion. So, if something happens, it's slightly negative about the figures, quarterly figures. You see how the market responds on it, and that you should take in consideration. And if for an investor, it's really difficult because you only know it when it already happens.
Yeah.
So, but you have to take that risk into consideration, I think. And if you look at Salesforce, it's quite if they can maintain the targets for this year,
exactly,
then the 20% was a little bit maybe over the top. But you only know that during the year. And I think if you compare it to I think it's the biggest competitor. I think Adobe has, on average, a little bit better figures than Salesforce. Let's see what's happening with the share price in the coming days, coming weeks. Do your homework, but it also gives some chances.
I was about to say that. Of course, you think about the threats now, but if you were interested in the sector and the company, and the outlook is still, I suppose it's true, like you said, then actually they expect a lot of the remaining year, and the price is 20% lower.
Yeah. Thank you for watching.
Thank you.
Give us your thumb and see you next week.
Bye.